Hey everyone, we're back with Simply Put for one last time in 2021. This is Sriram Iyer. You're watching Business Insider. Well, along with the wishes for a very happy new year to all of you, here I am to share with you what we know for sure is going to be true about 2022. And one such fact is that money isn't going to be easy anymore. You may have heard people complaining about inflation in the US and felt like giving them a whack, saying let's worry about India first. But the fact of the matter is, what happens in the US, and particularly rising prices in the US, have a bearing on India as well. And it may not be all that bad. Simply put, inflation is caused by too much money chasing fewer goods and services. And now we know why there are fewer products in the market. Because the pandemic brought the global trade to a grinding halt. Ships weren't moving, there weren't enough workers to move the products. And sometimes, there were not enough containers. Coal production had come to a grinding halt. So, anything that you could think of, from aluminium to computer chips to even Nutella, there is a shortage of it. Things didn't reach their destinations on time. And if they did, not in enough quantities, there is a huge headroom for production to pick up to meet the existing demand, right? Where people want things when they want it. And if they don't get it, they are willing to pay a higher price for it. And that's what causes inflation. And that's happening with, cars, phones, any product that you can think of. That explains one half of the inflation puzzle in the US, which is lack of products and services. The other half is too much money in the market. Now, where is that coming from? Since 2008, the global financial crisis, the US Federal Reserve has been printing money to repay old debt and then borrowing more money from the market to get the economy kicking, through tax cuts, incentives, new infrastructure projects, all of that. Now, because of this, the US national debt has gone up from $13 trillion in 2010 to more than double at $29 trillion now. And all that American policymakers wanted to see was a little bit of inflation, 2% to be specific. Prices going up a little bit every year is actually a good sign. It shows that, provided that people are able to afford it, a small amount of inflation every year shows a growing economy, and that's a good thing. And US policymakers have been wanting that for a while now. They wanted 2% inflation for over a decade, and they tried really hard. And it just didn't come through until now. But it's gone up to 6.8%. They pushed it a little far too much, and that's starting to hurt. Now that the US has to roll back some of the stimulus, repay old debt without printing fresh money, additional new money, or borrowing from somebody else, it means that some of the excess cash that's sloshing around in the global financial system will be sucked out through higher interest rates and other such policies. And which means, and that has set alarm bells ringing here in India, because people fear that foreign investors will start taking money out. And that's actually happened for much of 2021. Foreign investors have been net sellers in the market. They've been taking money out of shares, bonds, and every other asset that they have been investors in. As a whole, foreign investors as a whole, some of them are investing, some of them are taking money out. Net money, the dollars are flowing out of India, particularly in the portfolio investments. The fear is that valuations of startups, stocks, cryptocurrencies, and other risky assets will start falling once the money printing stops. And people will not have the kind of risk appetite, because they will not have the kind of excess money to take risks that they did so far in 2020 and 2021. I have an example here too. For over a decade before this year, India managed to create 30 companies, 30 startups whose valuations were $1 billion or more. These are called unicorns, right? $1 billion startups. Now, we created 30 of those it took over 10 years to create 30 such unicorns. But in 2021 alone, India has seen the emergence of more than 40 such startups whose valuations have gone beyond $1 billion. Now, that's a real boom, right, in the startup space. Now, that kind of a boom may not be possible once the easy money era ends. And that may not be such a bad thing, because some people may argue, if money is not easy anymore, it means it's more valuable, which means people will spend it more wisely and back companies, good companies with credible managements and good track record, as opposed to throwing it on any new startup or any new venture that has some promise, but the risk is much higher. After over 10 years, global leaders and policymakers are ready to say that, the economic crisis that the world was engulfed in is finally over. and that these emergency measures like printing money and giving stimulus, those are not needed anymore, and that the developed economies are ready to stand on their own, companies can function on their own, and the economy will be growing again at a fast clip with some amount of inflation. Now, that's a good note to start a new year with, isn't it? So that's all on Simply Put this week. This is Sriram Iyer signing off, wishing you all a very happy new year. Have a lot of fun and come back to us next week again. See you in the new year with a fresh edition of Simply Put.